Prices have gone up for the last 2 months in a row. Inventory is at record lows that we've only seen 3 times in the past before, and median and average prices have gone up $80,000 and $102,000 respectively just in the last few months. In this video, I'm going to share the short and sweet stats that you absolutely must know when it comes to the Greater Vancouver real estate market to be able to make better informed decisions whether you are looking to buy, sell, or invest in the marketplace. Hi everybody, my name is Jonathan Lerner with the Vancouver Life Real Estate Group, and our team has helped hundreds of people to be able to buy, sell, and invest in the Greater Vancouver area, in the province, and across the country. Should you be buying right now? Should you be selling right now? Should you be investing right now? Book a call at the link down below this video and let's have a chat to find out your specific situation and what makes the best next step for you. Let's dive into the stats. Sales volume in the month of March was 28% below the 10-year average, but it was at a 9-month high that we have seen in the entire market. So things have shifted in a drastic way. Even though we're well below the 10-year average, we are on the first uptick in sales volume that we have seen in more than 9 months. You're seeing open houses with 20, 30, 50, 70 groups coming through an open house, and we're seeing multiple offers across the board, whether it's 3 offers, 10 offers, or 20 plus offers, depending on the unit and the location. Things are extremely busy out there and buyer demand is through the roof. And the other aspect that is really driving this is inventory. Inventory is the story because we don't have much inventory at all. In fact, January and February, we typically see a 30% spike in inventory, and it virtually stayed flat for those 2 months, which has only happened twice. This time right here, and in 2021, when it was a drastically different market of absolutely red hot and sub 2% interest rates. This is also the 4th month in a row where our inventory, our units for sale, are sitting below 9,000, and it has only happened 3 times before, and that was in the red hot markets of 2016, 2017, and 2021. What did those markets do when we had inventory that low and a market like that? Well, prices shot up in a big way. Now, those markets were different than what we're in right now, but currently the trend is prices are shooting up right now, and we have this massive demand with very low inventory. So the only place, when you just look at the basic economics of supply and demand, is prices going to continue going up for likely the remainder of the year. And it looks like interest rates may get dropped or decreased slightly by a 1/4 point or a 1/2 point by the end of the year. And that's only going to increase consumer confidence in the market, which is then going to drive more people in the market, which then drives prices up because we cannot build fast enough to create the inventory for the demand that we have. The sales to active listings ratio is sitting at 31%, and that is up 18% in just the last 2 months alone. Where does that put us? We are completely in a seller's market where they have the power. They have the negotiating power. The buyers are coming to the table and just trying to put their best foot forward. And many times now, probably about close to 1 in 4 offers right now are being sold over ask, which is typically going to be a situation where it is multiple offers and you are competing against other buyers. That then correlates with the days on market, where just 2 months ago, when we were sitting in a balanced market and even a buyer's market for detached homes, it was taking 30 days to sell a home or property, a condo on average. And that has been sliced in half more than, and we're now sitting at 13 days on average to be able to sell a property. All this demand, as I've said, has caused prices to increase, and the HPI, the home price index, has increased on average about 32,500 since January. However, that is a lagging indicator and always falls behind what has actually happened in the market today. Your median price in the last couple of months has raised up $80,000 across all property types. The average price went up $47,000 in March over February, and in total over the last 3 months has gone up $102,000 in the median price for all property types. Just this last Wednesday, the Bank of Canada announced that they were holding interest rates. So the overnight interest rate is not going to change, which means those on variable mortgage, your payments do not change. They're going to stay the exact same, which is very comforting for a lot of people. The other aspect that happens when they hold the rates is that consumer confidence and sentiment in the market and just in the economy in general is improving. And so what does that mean? It means people are more willing to now put their money somewhere because they think that things are more stable throughout the country and throughout the world. And so that is also driving more demand into the real estate market, especially because there's been so much pent up demand throughout COVID and over the last year where interest rates were really going up and people were really uncertain about the future. And so now things seem to be more stable, and that's driving more buyers into the market, creating further demand and more pressure on our inventory crisis that we have right now. Where things go in the future is going to be really interesting with the Bank of Canada and their interest rate announcements, because GDP is increasing, the jobs market is extremely strong, and housing is going up in price at a fast rate again. And so if they further increase interest rates, that's going to put a lot of pressure, especially on businesses that have loans on their business. And obviously everyone with a variable rate mortgage, and people are already on edge for a lot of their homes right now. So the Bank of Canada is trying to take this into the picture, but at the same time, to be able to bring inflation back down to our 2 to 3% target, it's going to be really tough when 32% of our money supply was printed throughout COVID. And so getting to 4% is probably going to be fairly easy, it looks like, and we're on pace to hit that. But really dropping down to that 3.5% and below 3% inflation target, it's going to be pretty tough to get there. Probably without some further slowing of the economy in some way, or the new normal might be 3% or 3.5% for a little while, a couple of years, for us to be able to get back down into that window. All right, now for jumping into some advice. Now, if you have specific questions to you, absolutely go down below this video. There's a link to book a 30-minute call with me and my team, and we have the ability to dive into your situation very specifically to see what the best next step is. But general advice, if you're a buyer and you're looking to buy, or you're looking to upsize or downsize or make a move in some way, shape, or form where you're going to be buying a property, get all your ducks lined up in a row, because properties are moving fast and you have to be willing to be able to put an offer down and have a short subject removal period. That is very, very, very important if you are going up in competition against other people. So the only way you can have a short subject removal period is if your pre-approval is fully done. Right? Get your finances completely in order. Get your ducks in a row. Stay on top of the market daily. If you really are looking at being able to buy a place, stay on top, because things are going fast. And if you can get in to see a property before they have an open house that weekend, that can be extremely beneficial to you if they are not holding offers on the following Monday or Tuesday. If you are a seller, there is very specific strategies that you need to take into account in this market. And it is so, so important that you talk with someone who has been there and done that and helped and negotiated with people to be able to get the best possible price for them. And our team has done that. So book a call down below this video with that link. I'm happy to absolutely come over, talk to you about your home, about what your home's value is worth, even if you don't have thoughts about selling, just so you know where things stand for you, to be able to give you an evaluation of what is the price range where your home may land in terms of being able to sell it now, being able to sell it in 6 months at the current trajectory of where the market is going. On both sides, buying and selling, there is strategy, and it is very important, and it changes based off of what is happening with the amount of competition you have on an offer when you're listing it, to be able to get the best possible price that you can and attract the most number of people to be able to come and view your home and then bid on it. So strategy is extremely, extremely important. That's it for this market update, everybody. Please go down below this link if you have specific questions. Book that 30-minute call. And again, my name is Jonathan Lerner with the Vancouver Life Real Estate Group, bringing you stats and updates so that you can stay informed on the real estate market and make the best decisions when it comes to buying, selling, and investing in the Greater Vancouver area.